Our next segment is the ECB Preview. Here's Mario Draghi, president of the ECB. He holds the key to the next moves in euro dollar. He likes to hit the euro when he can. So a bit of background. This is an important meeting. The European Central Bank, based in Frankfurt, holds 8 meetings per year. But 4 meetings include new forecasts. This is one of those meetings, the March meeting. Same goes for June, September, and December. The ECB has one mandate, a single needle in the compass. That is headline inflation. It should be 2% or a bit lower. It just reached 2%. The ECB should be very, very happy. It's the holy grail of central banking. But core inflation is still stuck at 0.9% for the 3rd or 4th month in a row. Beforehand, it was stuck at 0.8. That means that oil prices mostly are responsible for higher prices. The upcoming change in the ECB's policy, announced already back in December, is that the amount of bond buying QE is about to be reduced from 80 billion euros a month to 60 billion euros a month. Here's a picture of ECB officials with printed money. ECB and inflation. Well, it's all about oil prices. Oil prices pushed inflation lower for quite some time, and the ECB worried about second round effects. And now oil prices rise. Well, at least year over year. Remember that this time last year, at the beginning of last year, oil prices were under $30 a barrel, crude oil. Now they're above $50 a barrel. So year-on-year inflation is naturally higher. Of course, the ECB had anticipated this. They told us that inflation would rise sharply at the beginning of the year. But the Germans are worried. Here's a picture from the early 1920s, from the Weimar Republic, when Germany suffered hyperinflation, but that was also a consequence of World War I. Anyway, of course, some central bankers are worried that rising inflation in oil, other energy prices will reach, of course, other figures, other products. Low interest rates hurt pensioners. We'll hear a question in the press conference tomorrow about German and other pensioners suffering because pension funds invest in safer assets and which have low interest rates. Unofficially, Mario Draghi targets core inflation, even though the official target is headline inflation. I think the ECB, not only Draghi, also most of his colleagues, look at core inflation. So other economic factors to watch out for in the Eurozone: growth picked up 0.4 in Q4, stronger than in Q3. Ongoing growth, quite a few years now of steady growth, and it's beginning to accelerate. Unemployment fell under 10% at 9.6 at the moment. Still a long way to go, still double the rate in the United States. But things are improving, including here in Spain, where the unemployment rate is at 18%, but it was already at 27%. Okay, and business and consumer confidence are up. So if you mentioned earlier that PMIs are a bit stuck or even falling in the United Kingdom, in the Eurozone, they're moving to the upside. And so is consumer confidence, not only business confidence. Forecasts. We have forecasts published by the ECB. Subdued forecasts. Last time in December, the last time the ECB released forecasts, they were part of the ECB's dovishness. In that December meeting, the ECB announced that QE would be extended until the end of 2017, the end of this year, and the program would be reduced, and that now the ECB can buy also very expensive bonds, including those that yield interest rate below its negative deposit rate, below minus 0.40. And part of the dovishness of that meeting was lower forecasts for inflation. So no change in forecast despite rising inflation means further dovishness. That means that the ECB said, we expected this and now we expect inflation to fall back. That means they're not very bullish on inflation. That means they will not change their policy anytime soon. An upgrade to inflation forecasts will lift the euro as well, because if the ECB says, okay, inflation is higher and it's expected to rise not only now, but also later in 2017, also in 2018, that means they will withdraw some of the stimulus. ECB also releases growth forecasts, but inflation forecasts matter most because the ECB does not target growth, but rather inflation. Let's continue. What's next? That will be the question, the questions asked by reporters and what markets care about. So the QE program runs through 2017, and probably in September, 3 months before it's expected to end, we will hear from Mario Draghi what's next. If they want to taper it, that means gradually withdraw the stimulus and stop buying bonds, and eventually sometime in the future raising rates, or extending it because the economies need more support. But I don't expect any significant announcements, any leaks, any talk about that before August, and any official announcement before September. So it's too early for taper talks, extensions, bullish, dovish. It's too early. But markets will be wondering, according to the tone. If Draghi is more optimistic, we'll assume that the next move will be tapering it. If he'll be more pessimistic, an extension will come into play. But we will not hear anything explicit. Moving on, Mario Draghi, pictured here, he would prefer keeping the euro low. He would prefer, consolidating the gains in export growth. Weak euro helps export growth, and in inflation. Okay, so we have a recovery, we have lower unemployment, we have higher growth, we have higher inflation, but it's a bit fragile. He would like to consolidate that, and he can withstand a bit more of criticism he is under pressure from everybody. Of course, he has a very important role in the Eurozone. So he'll, of course, call for others to do more. But I think he would like a weaker euro. He can withstand further pressure. So my baseline scenario is as you were, no big changes. Ongoing stimulus is needed. No plans at the moment to taper. Too early to talk about that. No change in forecast. That means rising inflation is what we expected, but nothing much. No change to future prospects, and no tapering. I would say that in this scenario, the euro dollar would fall because it's a dovish tone. That means that we are expecting further stimulus, perhaps. But the focus returns to the French elections in a matter of a few days. French elections are held in a long time from now, but they have a big impact. But I would say that this would deal a blow to the euro because ECB would be relatively dovish, but it would not last too long. That's my baseline scenario, most likely scenario. Other scenarios. The optimistic scenario is that we have upgraded forecasts, that the ECB is happy with inflation, and the tapering will be discussed in the next meetings. In plural, meetings, not one meeting. That may be the next one, but and in this scenario, which I see as quite unlikely, the euro will jump. I don't see it as likely because we're too far away from the end of the program, and the ECB would like to keep the euro low. A third scenario is the pessimistic scenario, a downgrade of inflation forecasts, worries about political uncertainty, and there is political uncertainty, elections in the Netherlands next week, elections in France, in Germany later in the year, Donald Trump, of course, and worries about reform, sustainability of achievements, very, very pessimistic, and not ruling out extending QE to 2018. Also, I see this as unlikely. In this case, the euro will tank and will remain depressed for quite some time. I see it as unlikely because inflation is rising, so it'll be quite hard for the ECB to say, we ignore all the data we've seen so far, and we expect a big downturn. So also quite unlikely, but we should take this into account. Okay. Conclusion. Two things to watch out for. The forecasts, inflation forecasts, remain the same, upgraded or downgraded, and the tone, optimistic or pessimistic. I would expect Draghi to play his magic. He wants a weaker euro. He'll succeed in getting that, but it'll probably be short-lived, not last too long. Markets have other things on their minds, okay? That's my ECB preview. I see no questions here, so I think we can move to the next segment.